Welcome to the NanoCap podcast. I'm your host, Will Chernlin, and I'm excited to have you join me on this journey through the world of NanoCap companies. For the past decade, I've talked to thousands of business owners across various industries. It's been an enlightening experience revealing the vast tapestries of entrepreneurship and innovation that thrives beneath the surface of mainstream media coverage. Each week, I will interview different leaders of NanoCap publicly traded companies to learn about their history, what they do now, and their future. As a reminder, none of this information is financial advice, and it is all for entertainment purposes only. Let's start this week's episode. Hi, everyone. In this week's episode, I have the pleasure of speaking with Josh Sodaitis, CEO of Peer-to-Peer Network, stock ticker PTOP. Peer-to-Peer Network's main product is MobiCard, an exclusive and revolutionary digital business card platform in exchange for seamless networking. Josh, thanks for coming on the podcast.
Thanks for having me, Will. I appreciate it.
So before we get into MobiCard, can you tell me a bit more kind of about your journey from being a trader of metals in Boston to then becoming a director of investor relations? How did all of this kind of culminate in yours becoming the CEO of MobiCard?
So that's a good question. My background, right out of college, I was a stockbroker trainee. Then I took my Series 7, became a stockbroker, passed my Series 63, was practicing, and, that gives you the ability of all states. And then I took my Series 24 to be a general securities principal, to supervise investment banking, market making activities, and all brokerage operations. So I was a general securities principal, or an OSJ, operational supervisor. And then I opened my own branch of a brokerage firm here in Boston. For those of you from the area, I was on the 10th floor above the Beantown Pub. And then 2009, we had a recession. Well, that was this tail end of a recession. It was late 2008. First quarter of 2009 was the official recession, 2 negative quarters of GDP data successive. And so my firm failed. And, I had kind of moved around, and then it was just kind of a natural transition to move into the third oldest exchange building in the country, built in 1909 down here on Federal Street, is the old Boston Stock Exchange on the first floor. Boston Options Exchange on the second floor no longer exists, and the Boston Metal Exchange was on the third floor, which all three of those do not exist anymore. But I moved into the third floor there and was trading, gold, platinum, palladium, and the rest of the precious metals. Silver was really hot at the time as well. And the gentleman that was running that firm had a private equity group. And I kind of got involved. So he was doing that on the side. So I kind of got involved with that. And that's kind of how I made my segue. So I started Momentum Capital Consulting, and I started Momentum Capital Ventures. So I started my own private equity group after leaving there, and kind of went out on my own. And then Momentum Capital Consulting, we had done a deal. So I wasn't the I wasn't a director of Allied Plasma. I was a consulting to do a share structure for them and to help them craft various outreach programs to various different funds to raise funding. With the help of a securities attorney, crafted them a private placement, got them all of the necessary documents to be in order for them to begin to solicit investments in private placements. And then my Momentum Capital Ventures private equity group ended up getting a deal with a company called Code 2 Action. That was a private company that was supposed to go public. And then in 2015, it did what's called an asset acquisition. There was an 8K, or a material event, filed with the SEC. Ownership changed hands, and the company became now Code 2 Action was publicly traded, and then it was kind of a longer story about I essentially did a hostile takeover. I got a position on the board, and the former CEO of the company had made some promises that did not come to fruition. And I slowly moved him off the board, put him into or moved him out of CEO when I brought in an experienced CEO that had he was 66. And that CEO just wasn't getting the job done. You know, he wasn't working past 5 p.m. and our accountants to get financials current were in Nevada, so they're 3 hours behind, and he just didn't have the passion. He just kind of was a CEO in name only and didn't really do anything. So I ended up having to jump in the role of the CEO. Wasn't actually what I wanted to do. I would have been perfectly happy staying with the private equity group and doing various other ventures. But when I make a commitment, I stick to it. And I had made a commitment to my Momentum Capital Ventures members that I would see it through to the end. So that's kind of how I became the CEO. Slowly kind of pushing them out and then taking control of the board and then getting majority votes, etc. And the idea was percolating around the time I invested in Code to Action. I am the inventor of patent number 1016368, and that's an electronic interactive business card mobile software system with customer relationship management database. So I am the inventor basically of the electronic digital business card.
And so when you first started working at the private equity firm, was that kind of the thesis in general, was to find kind of smaller publicly traded companies that weren't run well and do some sort of activist investing? Or was that just kind of something that fell in your lap?
That fell. So when I was working in the Boston Metal Exchange, the owner had their own private equity group and they were doing deals on the side. And then so then I just kind of stayed late one day and kind of copied the business and operational management and the whole binder. I used Harvard Business Services. They do a really good job. They give you this binder, it keeps everything organized, and then I just typed everything up and kind of swapped out the name. At the end of the day, so what we did is we would find private companies that wanted to go public, but not in a major way. They might have a $6 to $12 million market cap, not these big IPOs that you think of like with Facebook and you open at $30 a share, at $1 billion valuation, nothing like that. So it was all on a smaller microcap level. So one of the companies, for instance, was a company VizConnect, VIZC. And they were making QR codes at the time, and they were like one of the first that were doing this. This is back in 2012. And so the methodology to bring the company public was to do a reverse merger where you vend the assets into a private company and then essentially get the majority votes tendered over to the new management and do a name change. And then if you want a symbol change, filing with FINRA, the Financial Industry Regulatory Authority, all part of that reverse merger. So for an instance, a deal like that, we priced shares that on the inside the deal, they were 10 cents a share. It ended up opening at 33 cents a share. So our members then received, their cost basis was 10 cents a share. And then upon the event of the reverse merger, when the VizConnect became public, the stock opened at 33 cents a share. So right out of the gate, our investor group is up 330%. And then the stock actually ran to 55 cents, 66 cents, 77 cents, 88 cents, 99 cents. It got about $1.20. And so what I always tell people is, bulls make money, bears make money, and pigs get slaughtered. But yeah, that's the gist of it. Is basically selecting private companies, finding those. Ed Carroll was the CEO of that one, and he was the weatherman for our local WBZ Channel 4 for like 20 years. So he was kind of a well-known personality out here.
No, that's what I've seen with other guests is that they are CEOs of these publicly traded companies, but they don't really have any sort of finance background. You seem to be, out of my couple dozen guests so far. The one who it makes the most sense that you actually got into this business, that you already were working within these kind of small cap businesses and such. So with MobiCard, was it MobiCard when you took over, or did you have to use your patent and then kind of switch the business over to a totally different thing? Or what did you inherit, and like what did you change day one when you became CEO?
So it was considered an asset acquisition, and that bad CEO that there's kind of two poor CEOs, but the one that made me get involved, that had made some promises about things that were supposed to be done. Um, they had a patent that was pending. They also had a desktop app. Like there's no app in the app stores. It was all done web. It's considered a web app. So I inherited that. Unfortunately, the technology was sabotaged by that former technology officer of the private company Code to Action. So that kind of I inherited it, but it was considered a related party transaction. So for the 8K that was filed with the SEC, they had said that they had tendered $500,000 worth of assets, and they would receive a convertible note to convert into stock. But because the CEO of the private company had already been appointed to the CEO of the publicly traded company, that's at the time of that 8K. For accounting purposes, even though the patent that was typically the way you do for accounting, and might be boring, but it could be interesting too.
No,
Typically,
keep
the
going.
way Okay, so yeah, typically the way that you do a valuation on a patent, the way it's reflected on my balance sheet, it's typically valued at the capital costs contributed to obtain that patent. So if you have to spend 20 grand to obtain a patent, then typically the patent's valued at 20 grand. Now that valuation can then be graded at different levels down the road, but that's just kind of a rough starting place, depending on your material claims, and if you have a continuing patent that comes on the heels of it as well, can strengthen the value of that patent on the balance sheet. But because the CEO was the CEO of both, it was a unique rule where it's considered a related party transaction. You can't value any of these assets for anything. And I knew at the time that the patent would get granted because it's a patent pending, right? There was first a provisional patent, then it went to patent pending, and then as a utility patent, then eventually it would be granted, and then that's a long-term patent. And I knew that that would differentiate us from others in the industry, right? We could have material claims that other digital business cards could not say that they have. So it would make us unique. It would give us a superior thing. So I knew there was value in it, but unfortunately, I could not value it on the balance sheet, predicated on the related party transaction aspect. So we had two choices that was presented to me. It was either you can cancel the convertible note, and then all of the shareholders that had been in the private company Code to Action would not receive any shares of the publicly traded company. And so what I needed to do was I needed to take a majority vote of shareholders in the publicly traded company so that they would be okay with voting for a deal that would incorporate the shareholders from that private company and allow them to be rewarded with shares. So we came up with it. I came up with I worked it out with the CEO of that company, a settlement agreement where those shareholders had to contribute a minimum of $150,000 to the publicly traded company. And I afraid there's some other stipulations too, but at least that way I could then convince the publicly traded shareholders that, hey, look, this is a value add proposition. And then once, not only do we get their assets, but they're giving us $150,000. And then those shareholders will help us along if you look at big picture, those are the shareholders that will help fund the company down the road even further. It will broaden the base of our shareholder base. And there were quite a few accredited investors, people that make over 200,000 a year that would be able to fund 5,000, 10,000, 15,000, 20,000 here and there. So I ultimately was successful in that goal. And we did what brought in our base. So, yeah.
And so, tell me about your product now, the MobiCard. What does it do? Who would use it? How did you sell these new investors on that this is kind of going to be the future of how kind of peer-to-peer networks work in the business world?
All right, so I inherited a patent pending and a broken technology. With that $150,000, my goal was then to build actual real apps in the app stores which was a digital business card. So the patent is in my name as the inventor because it was started by someone that didn't finish it and the technology was broken. I then took that and built upon it. One of the things I remember as a stockbroker, I was one of the top performing brokers for the JP Turner office here in Boston, and they flew us out when I was 27 years old. They flew us out to the headquarters in Atlanta, Georgia. And I remember being so excited, I had my fat stack of business cards and they had all these seminars for it was like 4 days or something. And I met a lot of people. And I remember coming back and telling my boss, I gave every single business card, like 150 business cards. And my boss was like, well, how many business cards did you get? And I was like, 10. And he's like, well, you might as well have thrown your cards away because if you don't get a card in return, you can't ever follow up with that person. So it's now up to that person to be like, hey, maybe I want to call that stockbroker and buy some stock right now. And it typically doesn't work that way. You've got to call them, follow up with them, send them an email, tell them a little bit about what you're doing, give them a market strategy, let them watch some of your picks, and then you gain their trust, and then you be able to do business with them. So part of that idea in my head was I don't want to give a card without capturing the other person's information. So one of our material claims that are patented, and this is one of our stronger claims, is that anytime I share my MobiCard with you, the digital business card, I also capture your first name, your last name, your email, or your direct cell phone number. And we do that either or. Either way, I can reach back out to you and contact you. But we said, sometimes a female that you meet at the bar is not willing to give you, type in her cell phone number. She might be more comfortable giving her the business email. So we give that either or. If they fill in both, then you get both of those things. Another material claim is data analytics tracking shared by a link. So as that young stockbroker, I would actually not only want to be able to capture that person's information, right? So that way, if I passed out 150 business cards, I would have had 150 leads I could follow up with. I also realized that what's really important is to know when to follow up with people, like the timing of it, right? I don't just want to call them out of the blue and it's a bad time for them. So one of the 19 material claims of our original utility patent is, and it was added to the grandfather patent or the patent continuing patent. We filed it like it's like a child patent that just adds some material claims. So, anyways, that material claim is data analytics tracking shared by a link, and what that does is if I shared my card with you today and you open it tomorrow at 12 noon. I get a text message that says, Will opened your card, his cell phone number or his email is this. Now that enables me to reach out to you when you clearly wouldn't have opened my card and looked at my information if you didn't have time. And that's extremely valuable to any sales industry. I know the real estate agents love that because if someone opens a card on a Saturday afternoon, they'll literally call them and say, hey, I saw you just open my card. Love to invite you to the open house we're having. It starts at 2 p.m. today, and really drum up that business. And knowing who to follow up with and when, I think is important. But I even took it a step further than that. Somebody that opens your card and spends 5 seconds looking at it, that's not maybe a good lead. Maybe they accidentally even opened your card and they were trying to navigate the app. That might be someone that you're really is not worth following up. So what we did is even another step further is so that you can get that data analytics of what they clicked on, because you, as any digital business card these days, they link your social media, your website, your email, right? Basically, it's like your digital footprint. So now you can see whether they clicked on your website, whether they clicked on your Facebook, whether they clicked on your Instagram, whether they clicked on anything, other things that you have posted there. So it's clearly someone that spends 15 minutes, or whether we also have an audio message that also differentiates us. So like you can change it every week or every day, like, hey, we're having a special, or hey, we're having an open house, up to 5 minutes. So if they click that and they listen to your whole message, it shows the time duration. Do they listen to 5 seconds, or do they listen to 5 minutes, right? Or 3 minutes, whatever your message is. Knowing someone has spent a lot of time looking at your card makes them a more valuable lead to follow up with, right? So that enables you to not only know who to follow up with and when, but how to more efficiently utilize your time. Someone that spent 5 seconds on the card, I might not give them a call. But if I look at the data analytics and I'm like, this guy just looked at my card for 20 minutes, that's a guy I'm definitely calling in the near future, if that makes sense. So that's what kind of differentiates us from the market. I forgot the second part of your question.
Oh, I was just kind of just wondering in general, like who is the main people used it, but you already said real estate agents and people in the sales industry and stuff, people who I definitely would expect to be business card heavy.
Well, think about it this, Will. Do you have a business card?
No. Well,
Okay.
I might have one way hidden off somewhere, but I haven't seen it in years.
So having a digital business card, and MobiCard is free. People can go and sign up for free right now. We haven't even come out with the enterprise app, which will have a paid version. The free version is out right now. You can literally go in your Apple store or your Google Play store and download it for free right now. MobiCard, MobiCard. It does have a little TM for our trademark in the upper right-hand corner. They're cutting down 7 million trees a year just for printed business cards. Paper business cards is 7 million trees cut down per year. 90% of those paper business cards are thrown away. So it doesn't make sense. This industry, according to the Gartner Group, is estimated to grow to the hundreds of billions by 2032. So I feel like we caught on to a trend. We were the first app in the app stores. MobiCard was the first digital business card company in the app stores. Now, we suffered some setbacks and had to do a redesign and came out with the new apps recently, our MobiCard 1.5. But this is the future. It's inevitable. I think there's a bigger application. I mean, you heard that Zuckerberg talked about fighting Elon Musk. You remember that cage match? Who did you have your money on?
I think I'd go with Zuck. I think he has a little bit more training under his belt.
Yeah, he's a jiu-jitsu guy, right? And he's
Yeah.
younger and he's in better shape. So I don't think we'll ever see them fight. I mean, one thing we know is that they will never promote each other. Like Zuck's never going to promote Twitter or X, right? And Elon Musk is never going to promote Facebook. So I think that leaves a space for a little guy like me to capitalize on that, right? Linking all of a digital footprint. So right now we're going after this low hanging fruit of a business card, but I see applications to go far and beyond. I mean, I want every single user from every single platform to have a digital footprint. I mean, if I was in college, let's say, I used to have to call people's dorm, and if they weren't there, I'd just have to call back later. It would just ring and ring and ring. But if nowadays, like my little cousin, like when he makes a new friend, he's like, because I asked him, I said, how come I don't see your fraternity parties on my Facebook? He's like, well, my mom and dad's got Facebook. And I'm like, so he's like, check me out on Snapchat. And I'm like, oh, Snapchat, because his parents don't have that. And these social media platforms keep evolving. TikTok's now the hot one, right? So it's like kind of the younger generation don't want to be on the same platform, it seems like, that their parents are on.
Mm-hmm.
But to make a new friend, they've got to friend them on Facebook, follow them on Instagram, I don't know what it is, to Snapchat them, TikTok them. They've got to do it's like 30 minutes. So imagine if they could just say, hey, got Mobi, and they're like, yeah, here's my Mobi. Boom. Now you can connect with your new friend across all of their social media platforms in a simple transition. I call it a dynamic digital footprint. Really, it's the way of the future that everyone's going to have a dynamic digital footprint, and they can they can actually share their entire footprint with the various things. Maybe they have a website that's attached. Plus, if I had the data analytics that I just told you about, and I shared, I made a new friend, instead of getting a phone number, you're like, oh yeah, what's your Mobi? Like, let's connect in social media to like a girl, like, when I was in college. And then I saw that girl on my data analytics spent 20 minutes looking all over my stuff. That's going to give me the confidence to be like, I'm going to ask that girl out, right? So, I mean, I think there's so many more applications that people aren't even grasping yet. I think I'm a little bit out there with the visionary process on this. Right now, we've just got to focus on signing up the business card industry. But ultimately, I think this is a product that can be used by every gender, every race, and every age group, once they're old enough for social media. So applications under just the business individuals. So the future is huge.
Yeah, you kind of answered my next question because I was going to ask kind of more from the peer-to-peer network that you're building out. Would you see it more in the future as kind of like a LinkedIn competitor where you view other people's profiles and how they're linked to each other? Or would you see it more as something like Zoom Info where you have the ultimate database of every single person in every job title and where all their information is, so then you can sell the database to different enterprise customers and such? Is either of those kind of a way you want to go, or are you just thinking business cards first and then see where it takes you?
So I think it's bigger than all of that. I think it's bigger than every other. It's not so. We're not social media. We're a dynamic. Right now, yes, what the market understands is as a business card. So the 7 million trees cutting down, we're helping to save the environment. We're helping, to make a greener earth. We're helping, to reduce the carbon footprint and the climate change, but we're also making you more efficient in business, giving you better resources to who to follow up with, how to spend your time better. But ultimately, I think that we're bigger than all of those platforms because we, unlike those people that don't want to promote their competitors, we want all of their competitors. So we want all of the users, all of the platforms, and we want to be able to be a consolidated digital footprint that people can use not just in the business community, but as I said, even teenagers that meet each other in high school, they share that. And that way, if they have TikTok and they have Snapchat, but they don't have Instagram, you'll just connect with your friend on the social media platforms that they have that are connected. So I see it as even bigger than that. I see it as somebody will become this central hub because the social media platforms continue to evolve. Some were hot. Remember, MySpace even existed at one point. That kind of fell off. You've got different platforms that kind of rise in popularity and fall in popularity. But at the end of the day, there's nobody in that market filling the space that can connect them all, so that you can share and have a point of contact. And we are going in a digital age, and I think that it's a good space to be in.
So as I wrap things up here, I got one question about some of the research I did. Tell me a bit more about like the cryptocurrency you're all trying to launch and kind of how that will fit into this ecosystem.
All right, so I want to make it very clear that it is not a cryptocurrency. It is going to be
Okay.
considered a reward token. And we've
Okay.
gone to painstaking lengths to get that legal language accurate. So the way it was explained to me by a cryptocurrency corporate governance securities attorney is like this.
Sounds
Your
cheap.
father, what? Sorry, go ahead, say that.
I know. I was just saying that lawyer sounds cheap. I said jokingly. It sounds like
Yeah,
that's a
yeah.
quite the.
No, he's expensive as hell. He has a long title, right? Not just a
Yeah.
securities attorney, not just a corporate governance securities, a cryptocurrency corporate governance securities attorney. He's like three attorneys in one. But yeah, so the explanation was this: that if you're a father and you go into Chuck E. Cheese and you buy $10 worth of tokens, and your kid needs to take a nap, so you got to go home, and you're in the parking lot and you see another father coming in with his kid, and you say, hey, do you want to buy these Chuck and Cheese tokens, to play the arcades or whatever? And the father says yes. And then you make a cash transaction. That's considered a secondary market. Chuck E. Cheese tokens just traded in a secondary market. That does not make Chuck E. Cheese tokens a cryptocurrency. It just makes them a token, and that's what they are. They're like arcade tokens, basically, right? So
It's not a security.
in 2017, November 28th of 2017, that was when the two CEOs prior to me announced MobiCoin was going live. Now, our stock ticker symbol you announced at PTOP, the day that announcement came out on the Stock Day Media podcast, the stock was up 993%. Price went from 0.0005 to 0.0094 in one day. 993% price movement in that day. 1.16 million in dollar volume traded that day, and it outperformed every other stock on the entire OTC market that day. It was huge. Now, December of that year, the SEC came out and put out guidelines about what's appropriate, whether these things are considered securities, and started to put some regulations online. In fact, the SEC has been on the attack of these things ever since. So the CEO, after the CEO that put that out, that older, more experienced gentleman, he did put a squash on it. He shelved the MobiCoin. He stopped the program and wanted to make sure that the program was not resumed until it was in compliance with SEC, and wanted to make sure with the specialist attorney that it would be in compliance or we would have to change it. And he never brought it back. And then I had the issues with the app when I became CEO, and we never really concentrated on it. So we hired a local firm here in Boston as a cryptocurrency securities corporate governance cryptocurrency securities attorney to write us a legal opinion. So they reviewed it. So we've already got the program built. And the way it's not like a cryptocurrency. So a cryptocurrency is if you have an initial coin offering, you have to pay $250,000 and file what the equivalent of like an S1, okay, which is with the SEC. And that's very expensive. So having a reward token, whereas if you share your MobiCard 100 times a week, we'll give you 100 MobiCoin. And then it will be listed on a secondary market exchange that you can trade for cash or for other coins or for whatever, trading in the secondary market. But we're not selling the coins directly from the company. It's a reward program. And the idea behind this is if you want to get these coins because the coins are trading at 20 cents in the open market, that's going to incentivize you to share your card 100 times every week for a couple of months before we cap you out and say, okay, you can't do it, you can't do it forever, right? And so that's like free advertising, because the more people that the MobiCard is shared with, the more people know about us, and we hope it translates to more signups. So that's the idea behind the reward token of MobiCoin. Now, where do I think that could go? I don't really know. Remember, I was a financial advisor, stockbroker. So my background is in securities. I don't really understand what these cryptocurrencies trade on, but my tech team leader is an expert in these markets. I mean, he was sometimes, talking to the lawyer on the phone, that cryptocurrency corporate governance securities attorney, and they were like talking on a completely different language to me. It was like, I might have well been listening to Swahili at the time. So that's the idea of it. And yeah, we had to go to painstaking lengths. We paid $5,000 to receive a legal opinion so we could rely on that so that we would be in compliance with SEC regulations and that it is ruled a reward token.
No, it totally makes sense. And it honestly doesn't seem that much different than getting miles from Delta for using their airline and then selling your miles on some secondary market.
Exactly.
Well, Josh, thank you so much for the time. If listeners want to learn more about your work and what you all do, where's the best place to go? Is it the Apple App Store, Android App Store, or anywhere else?
So I would say you could download the apps, MobiCard. I would definitely try to download them because when we come out with the next version, it won't be free forever. We are just putting this free version out. But if you do download the apps at the Apple Store or Google Play Store, make sure you download them within the next 30 days. In addition to that, you can find out more information at the website www.ptopnetwork.com. PTOP, P as in Paul, T as in Tom, O as in Oscar, P as in Paul, network.com.
Awesome. I'll have it all linked in the description below. And thanks again, Josh, for joining. And for all of you still listening, please remember to subscribe and review. Thanks.
This podcast is for informational purposes only and does not provide financial, legal, or any other advice. The information is not investment advice or any offer to buy or sell any securities or to make any investment. The views expressed by the guests are their own, and any reference to third-party products, services, or information does not constitute an endorsement therefor by NanoCap Podcast or its affiliates. The NanoCap Podcast Express disclaims all liability for any individual's use of the information presented